What's up, guys? Welcome back to episode 2 of the Crypt on the No Money But Dreams podcast. I'm with my main man today, Bashir, as you all know. How you doing, Bashir? How's everything? First off, what's the
Um,
time over there, man?
it is 3 a.m. on a Sunday morning in Melbourne, Australia at the moment. Ready to rock and
Uh,
roll.
I'm very happy that you woke up from your slumber and ready to put in a shift now and talk about stuff that actually matters.
That's it, my man. That's it. Look, at the end of the day, money never sleeps, so why should I?
100% with you, man. All right, let's first start off. If you want to share your screen, let's go through sort of like a takeaway of the macroeconomic environment a week from the last time we posted the first episode. Let's run through kind of what's going on in the oil market, why that matters. Let's look at maybe some bond yields, why that matters. US dollar, obviously, to euro. And then let's jump into ETH and Bitcoin as usual, and then we can take it from there.
Okay, cool. Let me just chuck my glasses on, share screen so I can be as clear as possible. Let's do this. Here we go. Okay. It should be coming through now. So, all right, we're going to start with the Big Mac Daddy, the US 500, the largest index in the world, making up 500 companies, the largest 500 companies in the US by market cap. So we had seen a beautiful, beautiful double bottom here on the hourly chart. Really, really tremendous stuff. Like, technical analysts are really loving this. If we go back a little bit further, where we had seen that local swing high back at late March, where we had put up that level, we're still very clearly in a downtrend here. I'm not saying bull market's back on, and I don't want it to be conflated with the local bullish sentiment that we're seeing at these lower levels. But if we want to see what a double bottom or a kind of triple bottom swing looks like, if we notice here back at these levels, right, when it was testing 38.50. Now, obviously, we had broke down a little bit there on the hourly, but 1, 2, 3, it's a little bit of a breakdown, but bought up quite aggressively there. Now, if we're just to measure the range, right, that we had seen after that low or that swing failure, let's just take it from the actual level itself, right, and let's see how much more room that this actual swing has potential for. And it actually lines up quite nicely with where our
And
potential
lines
downtrend.
up perfectly.
Yeah, so it's like we had that kind of nice swing before we had that big breakdown, and so can it overextend itself and get back into that trend line or test it up where it would be in that zone where we'd come into like 40-40 level? That's possible, but I think what's more realistic is that we come up just under 4K, which is a bit of a psychological level. Losing or like retesting that as a bearish retest would be fascinating to watch before we move back down to 38.50 again, which we had seen that there'd be a lot of support there. So just shy of 4K and 38.50, I understand it's a big range for the S&P 500. There's going to be a lot of big battles here, but I still think that we're going to be in a secular bear market in equities whilst yields are ripping, and I'll dive into that in a second. Jumping into the euro real quick, something that I had mapped out a little while ago is a potential, bearish channel for it to occur in, and that we're kind of currently retesting the top end of that trend line that we had set back in late March. Similar again, looking at the US equities being the lead there, whilst US dollar strength is carrying on. I don't think that equities are going to really rip all that much, because the demand for safety and liquidity, and that currently being in the form of the US dollar, tends to stay quite high. I'm not a dollar maxi by any means, but if you look across the world, most currencies are weakening against the US dollar with very few exceptions. And we're seeing that potential bearish retest of the upper end of that downtrend, and then I can see us kind of moving backwards and having this real chop fest as we kind of break higher and then retest that 103 level again, which is a very clear level of support. It has been for like 50, 60 years, like 30, 20, almost 30 years of massive support. If I was to actually go into it on like a daily, for example, right, you'll see how huge of a level let me just change my source. The euro dollar is on that level. So give me a second here. All right, massive level, right? Just to give some context for this, I had shared this the other day with a few traders on the desk. But check this out, right? This is huge, this level, right? No, not mucking around. Look at that. So
Wow.
you had seen these levels. This was that
That's since when?
105, 10. This is
40
going
years.
back, yeah, 40 years, like massive level, right? Especially locally back in like 14, 15. So you're seeing here like that 103 to 105 pocket. You've got in like all of these retests, even now. And it's just, yeah, been titanium support for the euro. So obviously there's a lot of macro things that are going on leading for this downswing. So I'm not saying it's done yet, but yeah, massive technical level to be watching on the euro dollar. So that's one thing. Moving on, don't want to take up too much time talking about fiat currencies. They're not that exciting. But I do want to highlight some pretty crazy stuff that's going on gold. Massive range fest going on. 2074, 1677. Yeah, just really horrendous range at the moment. This is obviously on a daily, so this has been going on for like 2 years, big macro stuff, and you've had so much going on for gold. We've seen high inflation across the globe. We've seen obviously the unfortunate Ukraine crisis. There's a lot of things going on that usually would be benefiting gold, and it has obviously lifted slightly over that period of time, but not as much as some gold bugs would have hoped. But if we were to actually look and bring it down onto a smaller time frame as well, let's say going into the hourly, you'll see how much more horrendous the range is. Let me just get that all reset for you. Yeah, it's been just like this real range fest going on for a while, and we've seen here
Just
also bring
sideways for
down
days.
just sideways, and it's like obviously we've had some pops above like this like 1850 area, but really between 1850 and 8K is ultimately like the real levels that this market is going through. Slightly broke below, obviously got back up above it very quickly, but yeah, there's a very clear battle going on now. Look, in a world where equities is getting smashed, crypto's getting smashed, and gold is just sideways, that's kind of holding up its use case as a store of value. So
Yeah.
not here to rag on it or anything like that, or dump on gold, but it's just, yeah, it's not it hasn't made a decision as to where it wants to go. And despite the perfect storm that's going on from macro conditions that would usually lead gold towards being bid up, it's just going sideways. And so that's potentially going to be the case for a little while now. Quickly going to touch on oil. Really fascinating stuff, right? We had a huge huge bounce off that 102. I was expecting it to get down to 100, but you don't get everything that you want in life, and that is obviously represented in the markets. So yeah, there's been a big push for oil prices to come down. President Joe Biden is meeting with Mohammed bin Salman of Saudi Arabia, the Crown Prince, in hopes that they can have conversations with them, that they can increase their oil production, therefore bringing down the price of oil. And look, the oil is a forward-looking market in the sense that if oil prices continue to remain high, inflation will continue to remain high, because energy is one of the biggest input costs for producers and consumers and all that kind of stuff. So whilst that remains high and cost of living and cost of goods remain high, you're not going to have interest rates coming down anytime soon. You're going to continue to have interest rates rise in the hopes that further demand side destruction can occur. So that way, prices of oil can come down, and then you can have a positive flywheel as reduced oil prices leads to lower cost of goods, which means then there could be a potential lowering of rates. But yeah, it takes time for these kind of inputs to occur down the line, so that way it then is represented by central banks changing policy. So yeah, I'm looking at oil like as long as it remains above 100, 110, it's not looking good for risk assets. And then finally as well, what we're looking at here is the US 2-year yield. It's back above 3%, which is concerning because that means that the forward outlook is that they're expecting over the next 2 years, the Fed's fund rate will be getting around that 3% mark. We're currently around 1.75%, so it's close to doubling. The reason why it had sold off before and bonds had rallied and equities had rallied is I would say that, a lot of the expectations was that, we're in a hiking cycle. We are obviously dealing with a hawkish Fed, but, the 75 bips is now priced into the market. They are anticipating further 75 basis point hikes moving forward. But the thing is that with oil still remaining high, the UK had a 9.1% inflation print coming out the week before. So the global conditions haven't improved a lot recently. And so that's why bonds kind of got sold off a little bit. Yields tended to catch a bit of a lift. So 3% yield is also potentially going to weigh on risk assets, whether that be equities and crypto. I'm going to quickly touch on Bitcoin. I won't touch on ETH because they kind of trade in lockstep at the moment. Very high correlation between the two of them. So when we last spoke, Alex, we were talking about Bitcoin just sitting above 20K, and that if we lose that level, we'll get a bit of a sell-off. Man, we went down to 17.8. Nuts. Absolutely nuts. A huge, savage, aggressive sell-off. Now, obviously, we went back above that 20K area to catch that support that we were hoping to grab. So let me just bring that down into the 20K zone. Yep. And so that level just became clear support again, because it's a bit of a psychological level, being the previous all-time high from the 2017-2018 bull run. So we're probably going to retest that if we are wanting to make a move to the upside. But on a lower level as well, when we were getting sold off quite aggressively, we tried to attempt a run at 21.6, failed to do so. Liquidation run had occurred, broke down to 20K, back into it, and now we're back at that 21.6K level.
That massive red candle there, how much percent down was that in one day, man?
That in 1 hour was a 5% sell-off, but in the span of a weekend, so like from say the 17th till the 19th, which was absolutely nuts behavior, right? Let me just go back here. Yeah, so we had seen a sell-off from here, 17% over the course of a weekend. But leading into that, like, the moves were just horrendous. Like, it was just down only for a really long time. And we had this real battle between 28 and 32K. And if I was just to go towards that 28K zone, and when that battle was lost, ultimately, over the span of a very short few, like less than 10 days almost, it dropped 40% of its value, Bitcoin, right?
Unbelievable.
Insane. Yeah. So the people that are like thinking that it can go down another 40% from here, I'm not saying that it can't, like, getting like a 16K or something like that. Look, it's obviously doable, but the rate of the sell-off that has occurred now and the speed of which it had occurred, and obviously the whole saga with 3 Arrows Capital and forced liquidations and things like that, it was quite aggressive in terms of the sell-off. So in terms of what I would anticipate here, I'd say, I'm not saying we're going back towards like new all-time highs or anything, but I think a clear sideways price action, where if we get it clear above 21.6, then the next level is like just shy of 23K, and then we'll have to evaluate from there what would be a potential bullish setup, and then there could be more catalysts down the line. But I would be looking for like some support off that 17.2. I'd be just keeping an eye on that as we kind of try to get that retest back to 23K. So for the bulls to really take control, need to clear 21.6, stay above that kind of support level that it had set from that 17.8K swing low. And when that occurs, then we'll probably look for some, confluence between technicals looking really good and prices putting in a nice support base. And then obviously some potential easing in the macro environment or something really bullish from a fundamental perspective. But yeah, that's just pretty much it from a macro landscape. That's what I thought I'd just share that. So that was good.
Fantastic. So now looking at this situation, as far as Bitcoin is concerned, you see it probably going up a bit more here, testing those 2 points that you had brought up. And what about ETH? I know they're highly correlated, but some people just like for you, myself, I just focus on ETH more than Bitcoin than anything. Where were we
Yeah,
last week? We had gone down
yeah.
to almost
Man.
below $1,000 at one point, I think.
Yes, it was insane. So let's just bring up ETH for a second here, and I'll talk about 1700 or like 1400 for a bit. So like those two levels. So give me a sec. So 1700 here, and then I'll bring up 1400 as well. Give me uno momento, por favor. All right, let's go. So the reason why I'm bringing up these two levels, I'll go to a much higher time frame, right? Like say for a weekly, to kind of give some perspective, right? Now, 1700, look at this, right? 1, 2, 3, 4 retests, right? As we went into those levels. So this was obviously the retest in the bear market that occurred in May, June last year. And these are huge, huge, massive sell-offs, right? 41% sell-off, 1700 titanium support, right? 12% sell-off, titanium support. And then again, another sell-off, turning point ran up. Okay, huge sell-off here, down nearly 15%. Hit 1700 titanium support, lost that 1700 level, teleported towards 1400, like absolutely teleported, right? Like, and obviously on a higher time frame like this, you don't realize the rate of the move, but that's like a 17% move, right? In a couple of days, right? It was teleportation. As soon as it lost 1700, went to 1400. 1400 was the previous all time high. Was the previous all time high for Ethereum back in the 2017 2018 bull run, and then going back to a lower time frame here, we're going back and seeing that it did obviously have that spike below 1K, which was getting it to like that 870 was around the low, 880 was the low. So for anybody who loves the Chinese numerology system, you know, that was probably something that was getting bid up by them. $888 was getting bid pretty hard. So I could imagine that was probably what was happening. But no, look, like jokes aside, you know, we had seen a very, very rapid deterioration when we lost 1700, which was only in the 10th of June. Let's actually measure the move from the lost 1700 zone to how quickly it got there. So in a span of a week and a bit, it lost 48% of its value, nearly half of its value from that 1700 pocket towards the lows. If we're going off current market prices, it lost about 30%. But yeah, massive, massive lost level, that 1700. For the bulls to really, you know, put a case from a price action perspective, we'll worry about some confluence on fundamentals like ETH merge and things like that. They need to reclaim 1400, massive psychological level because of that previous all-time high. And then if they then put up another, you know, say 17, 18% move to the upside and retest 1700, then, you know, the Ethereum bears are going to be quickly getting underwater from that kind of initial sell-off where they would be doing a bit of a victory dance. So that's something that I'd be interested to watch. But I'm not looking at anything until 1400 can get reclaimed.
Fair enough. Makes a lot of sense. So where do you see it from here? You think it trying to go back to that 1400, or you see it going down? You see it moving sideways? What's your thoughts or predictions?
Look, like if we just kind of look at the sell off from here, it was really, really aggressive, right? So massive, massive sell off. So I would be more saying that there's more cases for it bullish than otherwise, right? I am a crypto bull, so I don't need much to be like, yeah, prices are going to go higher. So I'm very biased when it comes to that, though. But yeah, we've seen here an impulse move off the low, retest that kind of trend line that we've now established. So touch here, we could possibly get that going. Whilst this trend line remains intact, and you know, if it starts to round and get back below here, then it's not looking that good from a price action or a market structure perspective. But if we're continuing to kind of get chops up and down, and you know, we respect this very arbitrary trend line. But the thing being is that we're seeing higher highs and higher lows. So if you know we've got a low here, higher low, higher low, higher low, you know, that's really good price action behavior. to continue to build a bull case. And then if we're
Mm-hmm.
putting in that really clear uptrend where we're putting in higher lows and higher highs, and we get above 1400, then that is obviously quite a lot of momentum there, especially from the lows. If we can reclaim that 1400 zone, you've put in a 62% move off the lows. That is quite a strong bull market. Strong bear market relief rally, I should say.
Mm-hmm.
But yeah, even at current levels, it's still up about nearly 37% off the lows. So yeah, I'm not saying that we're due for all-time highs or anything, but yeah, this market has been beaten up quite relentlessly. So I could imagine a bit of relief is underway, and that's probably what we're seeing as we get back above that 1400 area. But I would watch for quick breakdowns of market structure, and that means that we're starting to see lower lows and higher lows, especially on the lower time frames, that might invalidate this kind of potential bear market relief rally strategy.
Now, obviously, there's a lot of talk about the US going into recession. Some people think it already is in a recession. How do you think that that affects the prices of Bitcoin and Ethereum, considering that more and more they're moving almost in parallel with risk equities in the US? So if we do move into a recession, people go risk off, move their money into more value stocks. Do you see that affecting the price downward?
Yeah, I would say that would be the case. Now, look, for me, I tend to mean revert back towards a Bitcoin maxi approach. I like to think that Bitcoin has store of value qualities, but that's kind of, that thesis has almost been invalidated with recent price action. I don't want to have developed too much of a recency bias though, to kind of put together my thinking. But I would say that if we do have a confirmed recession on the US, and oil prices remain high, inflation remains high, and the only thing that is possibly looking attractive is the strong labor market globally. It's very tight labor conditions. There's I think 7 million people unemployed, but 11 million job openings. I think that was the last
Yeah.
figures that came out. So yeah, very, very tight labor conditions. So that's the only kind of positive thing. If unemployment starts to tick up and we're in a recession, and we've got all of these myriad of less than ideal macro conditions, then yeah, of course, we're probably going to see Bitcoin and Ethereum sell off. The technicals would get quickly invalidated if that is the case. And there is no doubt that there's been slowed growth, a reduction in GDP over 2 quarters confirms a technical recession. How severe it is going to be up to, I guess, inflation, because if inflation continues to remain high, then the Fed will continue to raise rates, and the risk-free rate will continue to increase, and that affects everything. So I would say that's what we're going to witness. But that does mean that you can get some potentially good assets at significant discounts whilst fear is quite high in the market, and you can catch that rotation out. So as people are risking off, which is fine, you can have some really nice limit orders way down on your favorite crypto asset, and hopefully it gets filled.
Awesome, man. Well, thank you very much for this beautiful technical analysis, and can't wait to see what happens next week, and whether we go along the trends or see where it's going to go.
My question to you, Alex, is, obviously there's a lot to take in, but from your end, what do you see happening in the market? What do you feel bullish on? What's your strategy moving forward whilst, there's a lot of uncertainty in the market?
I mean, I'm definitely not as knowledgeable in the markets as you. I'm still early to it, but I do believe that we're going to see Bitcoin hit another low. I think that Ethereum is going to hit another low. From my personal side, I'm really stacking as much cash as I can, focusing on my business, focusing on profitability of that business, cutting costs so that I have liquidity to take advantage of what's going to happen. I really do believe in patience. It's difficult to not feel like you're missing out now. But by the same token, I feel that a lot of people get caught in this mindset where, yeah, I'll buy Bitcoin when it's 20% less. Then it loses 20%. You're like, I'll buy Bitcoin when it's 20% less as well. And then you never end up pulling the trigger. So
Yeah.
I don't want to get caught in that. So I'm trying to keep a straight head, trying to not get too emotional. And definitely dollar cost averaging, I think, is probably the safest bet that you can take. If you do believe in crypto, then the foundation and the reason for it to be hasn't changed. So why, because the prices are going down, is the thesis to purchase it changed, you know? But it's difficult when you see things moving down so aggressively and such massive swings and changes in sentiment every day. One day you read in the New York Times or in The Economist something positive, the next day it's something negative. So you have so much information coming in. And that's why I think technical analysis and the way that you're looking at it is really, really interesting. Because yes, you're taking external factors, you're reading what people are commenting on, but you're also trying to figure out where the patterns in the market and how can you come up with some sort of thesis on where price action is going to move and stuff. So I definitely find that very interesting. But I'm sitting on the sidelines for a bit, and I'm waiting. I think a better opportunity will come, but I also don't want to miss it. So keeping a large amount of cash for, I would say below any ETH below $1,000, I'm definitely pulling the trigger again. Bitcoin, I would say 20,000 as well. But then again, when that time comes, hopefully we'll be having a discussion and I won't get cold feet.
Yeah, well, look, this is why it's so important to have somebody that you can really trust in the crypto industry to help you execute your strategy. So, what
Exactly.
you can do is you can have limit orders in the market, either on an exchange that you trust or with a crypto broker that you trust. So, if you are wanting to run a trading strategy where you pick up BTC at 20K, 16K, 12K, and you'll have certain, like, let's won't give a dollar figure because it'll be different for everyone, but let's say you've got X amount of dollars left around and you want to allocate 20% of that at 20K, you want to allocate another 40% at 16K, and then another 40% at 12K. You can do that. You just contact your crypto broker or you get on exchange and you then leave your funds on that exchange with a limit order, an open order in the market to get filled at those prices. And that's an easy way to do it, because if you're always kind of trying to respond to market information and market data to then go into the market to place a market order, it's going to be really tough to like hit that buy button when the time comes, because you're going to be
Yeah,
running into 20K, or you're going to be running into 16K as prices are getting absolutely hammered, if that is the case. And that's why you've got your limit order there to get filled in a sell-off. But then you're looking at the charts and you're thinking, why would I buy this? This is, you kind of talk yourself
exactly.
out of it. So, having that kind of conviction where you just leave your orders in the order book, you've left it with your crypto broker, and then you just come back and find out, look at the prices once, twice a day, see whether you've gotten filled or not. It just allows for those higher conviction strategies to occur.
Yeah, I think an important point is that you need to come up with your thesis and your strategy and then just execute on it. And you can't keep changing it every 5 minutes. You know what I mean? You need to do your fundamental analysis, research, think exactly what it is you want, say, okay, I'm going to do A, B, C, D, and then just execute on it. Because the speed and rate at which we receive information now with Twitter, with the internet, with every single publication as an application, with a notification when you're in the middle of something and you're having a heart attack, and then Yahoo Finance hits you and this and that, it causes you to overthink a strategy which you should have just said, you know what, this is what I'm going to do. So I couldn't agree with you more. And I know that you started working or will start working with a crypto brokerage very soon. So I definitely think that that's something which I'm going to want to work out with you once you do get started, man.
Nice, nice. Well, thanks, Alex. I really appreciate your time, and I'm looking forward to seeing what you've got in store for us next week, and we'll really go from there. I'll be less on the technicals next week. We'll be focusing more on macro and fundamentals.
No, man, we got to go for the technicals. Anyways, let's wrap it up. 29 minutes. Thank you very much, Bashir. Thank you for waking up for this. Everyone who stayed till the end, thank you. Click like and subscribe. Hope you enjoy and participate on this journey in the bear, bull, whatever it is. We'll be doing this on a weekly basis and hopefully you get some value. Take it easy, guys. Thank you so much.